Hey traders, just wanted to do a quick update on Bitcoin. I know we look at Bitcoin like every day, but I don't really do enough of these short analysis on Bitcoin, so that's what I'm doing now. All right, so I know there's a lot going on your screen. You're probably wondering what in the world are all these colors and bars and harmonics. Well, just to try to keep it as simple as possible here. You know, we had that huge impulse up, right? April 1st, 2nd, whatever. And then we started upsloping in our consolidation, which I don't like. I really don't like that. If you're trying to be long and you have this type of price action after an impulse, that means that no one is getting the opportunity to accumulate at areas of value after the move. So if you just keep upsloping like this, eventually demand will dry up and then you'll dump to areas of value, which I can show you in just a little bit how we can do that. But for now, we're just talking about the shorter term trades and stuff like that, right? Okay, inside the structure that is upsloping. So we have that bullish cipher. Again, shout out to RedX for pointing that out. Once we hit that 786, okay, we'd be looking for targets because like when you hit the top, when you hit the entry, one would take their position and set up their stops, but then we look for those targets. What are those targets? So from the let's see, let me get this. It's off. Oh, there it is. Okay. So from your high point to low point, that's how you fib to get targets for the bullish cipher pattern. X, A, B, C, D, the entry. All right. Your first target, 38% retrace, 51.29. We hit it April 13th. Then we waited for the second target. That's profit taking level. So we'll take a little profit there. Then we sold off. You see, we dumped and then we came right back up. We hit the second target, 52.68. Nice. So we just kind of continued slightly up sloping. We've sold off, but we're staying above the 20 moving average. Very nice price action associated with these moving averages. When you stay above them like that, that's very bullish. Okay. And so we're really trying, we just tested the highest high since the beginning of this entry on the trade setup. This is the highest high we've seen. We got as high as 53.60, and we're looking for an entry of 54.29. Okay. Because what's developed is a bearish bat pattern. Okay, so we've hit two targets. We're looking for the third, but just beautifully, I mean, this is just how it works, man. Harmony. Okay, that third target or for profit taking and exiting for the bullish cipher turns into the entry for a short position on the bearish bat. X, A, B, C, D, an 88.6% retrace. Beautiful. So how do we get targets there? We go from the bottom of the bat to the top, that hypothetical top where that 886 is, because that's where we would expect potential price action reversal. And just think about it like this, critically thinking. If we ran up right now with the way the histogram is on the MACD, if we ran up right now and hit the 886, we'd probably be starting to get overbought. And also what we'll be doing, if we keep marching up, especially this weekend, we're going to get this going on. And what is that? That would be class A bearish divergence, higher highs, lower levels of lower levels of positive momentum on higher highs, impending price action reversal. If you get that, that's a coinciding variable. Add an 88.6% retrace from X to A. That would be awesome, man, because that would be like where traders would like close and reverse their long position into a short position. All right. And so again, from the low point to high point, we would fib. Our targets for the shorts would be 52.43. That's the first one, profit taking level. The second profit taking level is 51.28. Third profit taking level will be down like 49 or right around 5,000. Okay, we'll just say 5,000 on the dot. Okay, nice rounded number. So I don't know if we'd get there. But, you know, with the upsloping support, we might hit the first two targets and then bounce again to run. But this is what I want to show y'all. It's so intriguing to me. Okay, I think this is a great educational way to get perception, all right, on consolidation. 2 seconds. All right, so I'm just creating a split screen here for you. We're going to keep this Bitcoin current price action the way it is now. All right. And then we're going to look back to that downsloping consolidation we had before the huge break to the upside. Okay. November 7th to December 15th low. Get rid of this stuff down here. Why did that not save, man? Okay. So how did it go, man? How did this all play out? November 7th to December 15th. Impulse down, down sloping consolidation until we made a higher low. And then We broke out of the downsloping structure, double bottomed off of it, create a little pattern, hit one of our targets, almost two, and then we were gone, right? We were off to the races when we back tested the resistance as support. That confirmed to the market that this structure is done. It is time to retrace, all right? So what happens though if I do this? What if I inverse the current chart? What if I inverse it, flip it? Oh my goodness, man. Can you even tell what the real Bitcoin is right now when we compare from the right side to the left side? Let's just say, for instance, this was November 7th and this was December 15th, right? November 7th, December 15th. All right. So when you have an impulse down sloping consolidation, people do not get the opportunity to get in at areas of value right up here, the 38% to 62%, maybe even 78%, right? So they don't go short. There's no, like, okay, for instance, just like here, this was real life, like where we dumped, there was no value to go short down here, okay? The value is gone. Like, you're paying a high premium for a short position, but if we could have started to consolidate and upsloped like a bear pole bear flag and hit a 38, 50%, 62% retrace, then there's areas of value. Hey, after a huge impulse down, we have a great area, 62% sale on Bitcoin for a short. Ooh, that sounds real nice. Yeah, if you're on Amazon, right, 62% sale on something, yeah, you probably want to get it, right? So in this situation down here, there is no sale. There's from a high to low, you retrace maybe 23% of the way. No one wants that. There's no value there. So you're still paying a premium. So people wait until there is actual value. And here we go. This is a 62% retrace from that high to low. This is exactly where we projected we would go in time, especially with this kind of consolidation that was improper. So here we are. This is this right now, upsloping consolidation. All right, so what does that mean? What does that mean for us in current time? Well, if we are to eventually make this lower high at the 88.6% retrace from our previous high, that would signify, hey, lower highs is always bearish, right? So it's just confirming to it's almost like a double top, but it's worse, right? When you make a lower high than your previous high. So if we did dump and sell off and break out of this bearishly, we could easily Fibonacci. I mean, you could clearly just go the same way we did it, right? You could go from this little low here to high to get it, but there are more major retraces that we can talk about. So if we just fibbed it the exact same way we'd have done it on November 7th to December 15th, this would be November 7th, December 15th. Just kidding, right? I mean, you get what I'm saying? November 7th. All right. Anyway, a retrace, common retrace zone would be between 44.77 and 48.56. Okay, so that's where you'd start hitting the golden zone if we fibbed it exactly like we did the other way, right? So that's it, man. That's where we could expect to go. There's other ways to fib too. We could fib from the lowest low to the highest high, way up here. Not sure though, because if we sell off to these levels and then we bounce from there and run again, we could make higher highs, right? But we all know 5,800 to 6,000. That is the critical area of resistance where we're probably expecting a much larger sell-off. So right now we're just floating in no man's land. There's not really any resistance where we are, not at all, dude. It's no man's land. So it'll be very interesting to see what happens. I know we bounced off of this recently, this support back from September of 2017. So and with these upsloping flags, they don't always have to break down before running again. I mean, we see it where you have an impulse up, sometimes upslope, and then the bulls just have so much overwhelming demand. We run one more time. And look, at this point, the way we're getting so extended, this upsloping resistance is starting to be where we would hit that horizontal line resistance over here, 5,800. So you could extend on within this flag as long as you wanted to, but maybe we could extend on to hit 5,800 and then dump, right? Because that would make a lot of sense. But for now, we're just worrying about the short term with the ending of the bullish cipher trade and into the transition of the beginning of the bearish bat. All right. I know this was a decent amount of complexity involved with this analysis, but sorry. All right. Did all I could. If you enjoyed this, please hit that like button, that bell, that sub. Leave a comment in the description below if you want me to keep doing stuff like this. Really appreciate each and every one of you. I go live 6 p.m. Eastern and 11 p.m. Eastern. Check me out if you're a new viewer. That is primarily what I do. All right. It's live streaming. I do this kind of stuff for like hours at a time. All right. At your request, like you request a coin or a stock or a currency pair, I'll look at it and we'll do the same thing here. All right. So until next time, respect the TA.